Okay, in this video we're going to look at the 2018-2019 federal budget and provide an introduction to the stance of the budget and what are some cyclical factors impacting the budget at the moment. So essentially the government had a range of different goals they wanted to achieve with this budget, some of the main ones being providing tax relief for low and middle income earners, encouraging businesses to invest, so trying to create policies that will encourage investment. They want to lower the budget deficit, achieve fiscal consolidation, and they also want to guarantee essential services like Medicare and hospitals and schools. So looking at the budget, the budget deficit for 2018-19 was $14.5 billion. And he had a headline cash outcome of $27.6 billion. You don't need to memorize that. But as you can see, because there was quite a lot of cash outflows for investing in financial assets, that caused the headline deficit to be a lot larger than the underlying deficit. In terms of what's going on in the economy, we're experiencing our 27th year of consecutive growth. 1,000 jobs are being created on average a day, which is leading to a lot more taxation revenue. Global growth is really strong, so overseas growth rates are really strong, which is creating a lot more demand for our commodities. The Australian economy is improving, and it's also there has been an increase in non-mining investment as well, so companies outside of the mining industry are showing strong growth. One of the key things has been a lot of increase in jobs in full-time jobs, which is a benefit for the amount of taxation revenue. So 3/4 of new jobs have been full-time positions. The labour market continues to get stronger. Wages aren't growing significantly yet, but they're expected to increase. That's one of the reasons the deficit is expected to fall. Growth has been solid and expected to rise above 3% in the coming years or next year. GDP growth has increased by 2.75%, so we're getting closer to our target range. Unemployment has fallen, which has reduced welfare expenditure as well. So, some factors reducing the size of our deficit at the moment, the main ones being the really strong employment growth. So lots more people are working full-time, which means they're earning more money, which means they're paying more tax and the government paying less in welfare. Other factors, including the strong overseas growth, is leading to more demand for our exports, which also creating jobs and creating money for the government as well. Some factors that are causing it to still be in deficit are the fact that unemployment is still above 5%, which is a negative, and wage growth is still low, which is a sign that the government income taxes aren't growing at a fast rate. So let's have a look at this year's budget. Okay, you need to know these two figures. So in 2018-2019, the budget deficit was $14.5 billion. That's down $2.7 billion from last year's, actually $3.7 billion from last year's deficit. So the two key figures are this year's budget deficit of $14.5 billion, down from $18.2 billion last year, and even the 17-18 budget was mildly contractionary because the deficit was smaller. You don't need to memorize this figure, but you need to know that the deficit went down in that year as well. So this implies a mildly contractionary budget because there's a smaller gap between injections and leakages, which is a sign that it's likely to have a negative impact on demand. But having said that, the main reason why the deficit has gotten smaller is because of cyclical factors. So if you're analysing this question, what was the forecasted budget outcome for 17-18 and 18-19? Is the budget expansionary or contractionary? It's a bit both ways. The budget deficit for 17-18 was $18.2 billion. That's gone down to $14.5 billion as of this year, and this implies a relatively contractionary budget because there's a smaller gap between government expenditure and revenue. So that may be indicative of a move towards fiscal consolidation. However, having said that, most of the reduction in the deficit is because of cyclical factors. So we have lower unemployment rates, lots of jobs are being created, and that's causing us to collect more tax and pay less in expenditure. So the structural deficit, the deliberate policies have actually been quite expansionary. The deficit's fallen because of cyclical factors, the deliberate policies have been quite expansionary, and the deficit would have been a lot smaller if they weren't expansionary with their discretionary policies. So it could have been an even bigger drop in the budget deficit, but because they were expansionary with their deliberate policies, it wasn't as big a drop as it could have been. So summary, the predicted $14.5 billion deficit is less than last year. There's a smaller gap between injections and leakages. All of the reduction is because of cyclical factors. The deliberate policies have been expansionary. The net operating balance, which takes out infrastructure spending, is a deficit of $2.4 billion, which is a sign that a lot of the spending for a lot of the deficit is caused by infrastructure spending. So the last two budgets have been consistent with our repair strategy. The last two budgets are consistent with the medium-term or fiscal strategy and show they were on track to achieve surpluses by 2019-20. However, they haven't been contractionary budgets because the structural deficit has increased. That's pretty much the same. I'm not going to talk about anything there. Okay. Our debt is currently at 349.9 billion, our net debt. That's expected to drop in the next 4 years by about $30 billion when we start running budget surpluses. Okay, first thing we're going to look at in this chapter is policies to achieve fiscal consolidation. So some key policies that they're using at the moment to try and get the budget back to surplus. And the two main ones we're going to focus is on a more sustainable and targeted welfare system, and the second one is cracking down on the black economy. So in relation to cracking down on the black economy, they're banning any sales from businesses of above $10,000 being collected in cash. So you can't pay and businesses can't collect any transactions that are worth more than $10,000 in cash. The idea of that is so that people declare all of their earnings, or companies declare all of their earnings, and they're not sort of collecting it in cash so they don't have to pay tax, which will hopefully mean that the government collects more revenue, and that will help to bring the budget back to surplus. Another key policy for fiscal consolidation is related to a more sustainable and targeted welfare system. So some of the key things that they're doing there that you would include, I'd probably include three different things. The first one is those with outstanding fines and those who have committed indictable or serious offences are at risk of losing some of their welfare. So if you have committed indictable offence, so they're like serious offences, so serious assault, murder, kidnapping, serious fraud, things that you're really likely to go to jail for, you can have your welfare cut before you go to jail, so assuming that you're waiting for a court case. And the second one is that those with outstanding fines that refuse to pay them back can also have their welfare cut. This is combined with an increase in the waiting period for migrants, so migrants are going to have to wait an extra year to collect their welfare, which will save the government money. And they're also implementing a policy of data matching, which is matching up people's incomes to make sure they're declaring the right amount from what they've earned to ensure they were getting the right welfare. And they're going to try and get the money back that people have been dodgy and fraudulently claimed. So for example, if someone's claimed that they earn $200 in a week and that entitles them to welfare, if they actually earn $500, the government's got to match their income against what they've reported, and if that's different, then they will be detected for fraud. They will have to pay the money back and will also face fines as well for that. So the sustainable and targeted welfare system is related to fines and indictable offences, making migrants wait another year, which is probably the most controversial one, and as well as data matching to make sure people are paying the right amount for getting the right amount of welfare. Thank you.